Ladies and gentlemen, welcome to the midday market madness. But before we get into any of that madness and what actually is happening in markets today, which is actually probably better than expected, and maybe the word madness doesn't really portray what is going on, Nvidia is going to have their fireside chat with Morgan Stanley's technology, media, and telecom conference. There's been a lot of very interesting companies that have done this conference recently and showed off some pretty good details, most notably Nebius this morning, which we ended up live streaming as well. So if you guys are interested in Nebius, make sure you check that out. But in approximately 60 seconds, wait, can you guys hear music? Oh, no. Hopefully, oh, that sucks. The music is not what I wanted you guys to hear. That was to make sure that the call was going to go live. I think I just lost. That's a DMCA strike for sure. Okay. That being said, we are going to listen to the NVIDIA fireside chat whenever it turns on. And yeah, it was groovy. Yeah, no, it's going to be groovy for sure. That's the music they're playing. Okay. How are you early? Well, considering your comment came in at 12:59 and I start my stream at 1, that's how I was early. But yeah, guys, I'm really excited about this. This should be a lot of fun. Will it move markets? Maybe not. But yeah, should be starting here anytime. Oh, here we go. Okay, let's have a listen.
Roaring applause. I'm just saying that I'm not used to coming to work in this way, this total silence. I'm just kidding.
There were a lot of Taylor Swift comments along the way, so the crowd is ready.
Needs humor too. Is humor allowed here?
Humor is very allowed.
Right,
I made investment banking jokes yesterday, Jensen, but thank you for being here. For the last, I think, 25, 27 years, you've been such a great supporter of this conference. I think we sometimes become numb to the scale of the numbers and the transformation we're experiencing. I don't think I'm the only one in this audience. I'm getting billions and trillions confused constantly. My partner, Mark Edelstone, and I, 27 years ago, we sat on a stage much smaller than this one on the Morgan Stanley trading floor, and we announced and introduced NVIDIA and you to the Morgan Stanley sales force. And believe it or not, $48 million IPO, 1998 revenue, trailing revenue, $30 million. Jensen and his team, Colette, were so generous. 2 years ago, you hosted our board meeting in your headquarters. I think you had just announced a $30 billion quarter in terms of revenue. And then last week, a $46 billion net income quarter. So we've moved from years to quarters, from millions to billions. It's really amazing and unprecedented scale and growth. And then you've changed our lives. You've changed our lives. And so I guess my question after that is, what had to come together strategically, culturally, technically to deliver that type of hyper growth at scale? And the scale is really astounding. And again, thank you.
That's going to take 37 minutes and 13 seconds and slightly more. Obviously, NVIDIA wasn't built overnight. It's taken us 33 years. I sort of remember somehow that when we went public, our price was $13, and I just read here is $12. I overstated it. I remembered it to be much more optimistically than it was actually. The company's valuation at the time, I think, was like $300 million. And Mark did such a good job, Mark Edelson did such a good job preparing all of our investors that they really only had one question. It was literally a one-question IPO roadshow, and the question was, when are you going out of business? I'm not kidding. That question is about as hard to answer as the one you just gave me. Well, the answer is, as it turns out, we started the company with the idea of creating a new computing platform, a new way of doing computing. And not that the old way was wrong, it's just that the new way, a new way is essential to solve some unique problems. And the type of things that we were extremely good at are algorithms. Algorithms, because the inner loop of the software tends to be about 5% of the code, but 99% of the compute time. And back then, the algorithms in the world of computers was quite rare. And one of the most important algorithms was computer graphics, the simulation of light and how light travels through space. And so computer graphics was used for things like animation movies, of course. At the time that we were founded, the cover of, I forget which magazine was, Jurassic Park was there. And so it was during that time where computer graphics was becoming more capable, and we could simulate, virtual reality with it. And we applied it to creating a new industry, which did not exist at the time, called video games. And so 3D graphics was modernized in my time, consumerized in my time, and the whole video game industry was created in my time. And when I say in my time, meaning it was NVIDIA that pulled it all together. The reason why we're so beloved in the video game industry and we're so deep in it still is because in a lot of ways we created a modern video game industry. From the algorithms associated with it, the libraries, in the computer graphics industry, without RTX, there would be nothing today. Without our contribution of all the algorithms that goes into all of the game engines, you wouldn't be able to enjoy the type of video games you enjoy today. So NVIDIA has been deep in the world of algorithms since day one, 33 years ago. Now, accelerated computing requires what is described as a full stack, meaning the architecture, the chip design, the libraries that sit on top of it, how it's integrated forwardly. I'm using that. Apparently, there's this new idea called forward deployed engineers or something like that. NVIDIA's had dev tech engineers 33 years ago. We deployed them into the world's video game industries and video game companies and game engines, and we integrate our technology into their game engine. Today, if you look at Epic's Unreal Engine, NVIDIA's technology is all over it. And you go into every game developer, NVIDIA's technology is all over it. That's the reason why all the games run best on NVIDIA, for good reason. That's the reason why NVIDIA is the world's largest game platform. You probably don't know this, but there's several 100 million active GeForce gamers in the world. Many of them turned into AI researchers. It is because of GeForce GTX 580 that Ilya Sutskever and Alex Krzyzewski and Jeff Hinton, it was Jeff that told them to go buy it, to discover CUDA. And so the first idea about NVIDIA is that we're a full stack company. The second idea about our company, and this is really old history that many people might not have been born yet. But during that time, the PC architecture was incompatible with today's computer graphics capabilities. And we created some new technology called Direct NVIDIA. It was a way for applications to directly communicate with our APIs. And we exposed it to some very important companies. It became DirectX. If you look at the way that we communicate between us and the application, that was completely revolutionary to bypass a whole bunch of software that makes it slow, to make accelerated computing possible. We introduced the idea of virtualized frame buffer memory into system memory. It was initially called AGP, which then became PCI Express. Many of the system architecture had to be reinvented so that we could accommodate video games and 3D graphics in a PC. Well, that same sensibility of both innovating the full stack to be integrated into in algorithms, as well as changing the architecture of systems so that we could create new computer systems, led to that same sensibility, expertise led to DGX-1, which was the world's first AI supercomputer that I delivered, by hand to San Francisco here, very close by, to a company that eventually became OpenAI. And so the fundamental attitude, if you will, expertise, how we see the world, propagated in this way. It's literally 33 years. The company's entire culture is designed to be full stack. The organization is designed to be full stack. The entire system is designed to create new stacks and new system architectures that allow us to do this. Well, we started with, of course, if you look at Nvidia's graphics cards, GeForce, it's a technology marvel. How it's integrated into the operating system, how it's integrated into the system architecture, completely reinvented how computers worked before. Well, we have no trouble with that with DGX-1. I have no trouble with that with the first supercomputing cluster, which then went to Satya for their first supercomputer. And you might people noticed that Microsoft's first supercomputer and Nvidia's supercomputer had exactly the same benchmark, like down to you measure the performance of the system across all of these GPUs. That was about 10,000 GPUs or so. It was exactly the same performance. And the reason for that is because we designed it and we delivered to Azure Cloud. It was all based on InfiniBand. It was all based on Ampere 8. This is the A100, which became the first computer that OpenAI used. And so we're quite comfortable with this full stack, full system approach. And without being able to do that, it is impossible to stay at the bleeding edge. It is literally impossible to keep up with a company that's building not just one chip each year, but we're building an entire infrastructure each year because we own the CPU. We revolutionized the new way of designing CPUs, and you'll see more examples of that. We revolutionized the way we do CPUs, revolutionized the way we obviously do GPUs, connect them together using this thing called NVLink, which revolutionized the way you build computers all together, connected together with a new type of AI Ethernet called Spectrum X. We connected everything together. Now we own the entire stack. We know all the chips inside. When you own the entire stack and you own all the chips inside, you could change it every single year. If you don't own the entire stack and you don't own all the chips, it's hard to innovate every year. And the reason for that is because you're connecting too many cats and dogs, and there's too much innovation to pull together once a year if you can't control it because it's a full stack problem. So that's how we got here.
It's amazing. In the last 2 years, since you were here last and our board meeting, we've sort of gone from generative AI models to reasoning and now agentic. And Satya just finished a panel on the enterprise. And at the enterprise level, we're working with Microsoft, the OpenAI, xAI, Gemini. We had Dario here from Anthropic. The capabilities are extraordinary. What does it mean around the size of that enterprise market? How is it changing? And how is it going to be adopted? And how do you sort of see that playing out over the years? Because it's a big, big topic at the conference.
Yeah, really good. Literally in the last 2 years, we went through 3 inflection points in AI. The first inflection point, first of all, the technology sat there in plain sight for months. GPT-3 sat there in plain sight for months until somebody wrote essentially a wrapper around it and turned it into ChatGPT, turned it into an API, made it available and easy to use by everybody. But the first inflection point was generative, as you mentioned, the ability to translate, convert information from one form to another form and auto-regressively generate tokens. And the second, but of course, the problem with generative AI is that it's prone to hallucinate. And the reason for that is not because there's something fundamentally wrong with the technology, not because it didn't learn all the right things, but because it's not grounded on contextual information. It's not grounded on relevant information. And so the second thing that happened was '01, and reasoning came about. But behind '01 is also grounding on research, grounding on truth, and the ability to combine generative with semantic. We call it retrieval augmented generation, but basically conditional generation. Okay, conditional generation meaning that what you're about to generate depends on context and ground truth or whatever research or whatever it is. And so the second generation introduced reasoning, self-reflection, the ability to self-correct, because sometimes what comes out, your mouth, you kind of wish that you pull back and you go, and so in the case of AI, it has the ability to do that in real time. And so '01 became much more grounded, and the information that was generated was more reliable. So what happened? What came out as a curiosity and incredible excitement, and the tech industry jumping onto it because we realized what can happen. The next phase of it, the usefulness of ChatGPT just skyrocketed. But the amount of tokens that it generated was much, much more than the first generation. Maybe 100 times more tokens. The model is maybe 10 times larger, so it's probably something like 1,000 times more compute. So from '01 over ChatGPT, call it 1,000 times. And then because it was so useful, maybe 1,000,000 times more usage. Okay, so the combination of usage and its usefulness and groundedness allows us to we saw that next phase of growth. But in the end, what '01 did was it provided information, essentially a chatbot that was much more factual. It was informational, and of course, for many of us, we use it for research and we use it all the time. Instead of searching, our goal isn't to search. Our goal is to get answers. And so ChatGPT gave us that. That was kind of the second inflection. The inflection that we're seeing here also sat in plain sight for quite a long time, and it's basically the ability for AI to use files, access files, and use tools. And so now it could reason, it could think, it could use tools, it could solve problems, and it could do search, it could do planning, and so probably the biggest phenomenon that's happening, and if you're paying attention to it, I'm sure you are. OpenClaw is probably the single most important release of software, probably ever. And if you look at OpenClaw and the adoption of it, Linux took some 30 years to reach this level. OpenClaw in 3 weeks has now surpassed Linux. It is now the single most downloaded open source software in history, and it took 3 weeks. If you look at the line, even in semi-log, this thing is straight up. It's vertical. It looks like the y-axis. I've never seen anything like it. Okay, it literally looks like the y-axis. And so what's happening now? You could give a problem statement, start with the prompt goes create. The last prompt, the way you kind of think about it, the last prompt was what is, when is, who is, right? That's the last prompt. This now prompt goes create, do, build, write. Does that make sense? So what's happened? The last prompt was queries. This prompt are actions. They're tasks. Do something for me. And you describe it as, expressively as you like, as with a lot of intention, and let it infer, or very specific. And it goes off and it just churns. It just thinks. It goes off and it does research and it reads a manual. If it has to use a tool, it's never used it before, it reads the manual of the tool. It goes off and studies what's on the web and it applies the tools and performs the task. Now, I just said we went from one generative prompt, one generative response, to now one that is 1,000 times more tokens, and agents. We call them at the company claws. These claws are now consuming 1,000,000 times more tokens, They're running continuously in the background. We have a whole bunch of claws in the company, and they're all continuously running, doing things for us, developing tools, developing software. And so now the question is the implication. The amount of compute in our company that we need has just got skyrocketed. The amount of compute every company needs is skyrocketing.
So in that context, I think over the last few days, it's come out, certainly at Morgan Stanley as a user, maximum bullish on tokens, maximum bullish on doing and creating. It does require the compute you just mentioned. And the question is around the financing and the CapEx around that to support that extraordinary large compute. How does it all get financed as you see it from a sort of top of the ecosystem? And how do the AI factory economics play out and evolve?
Yeah, and so there's a couple of thoughts that's really important. Remember, I appreciate you using the word factory. Several years ago, I described that these data centers, what people call data centers, is not for storing data as in a data center. They are producing tokens. And so a facility, a plant, with the fundamental purpose of producing tokens is a factory. It's an AI factory. At the time, people said, Jensen, that sounds so grungy. It's clean. But it produces tokens, and nobody likes to build data centers because who knows what kind of return you're going to get on a data center, but everybody loves building factories. And the reason for that is because factories make money. And we now know for certain that these factories directly generate tokens, and these tokens are monetizable. And the more compute you have, the more tokens you can produce. The more tokens you produce, the greater your top line. We now know for certain that companies' revenues are directly correlated to compute. And we know that for a fact because if Anthropic had 3 times more compute, their revenues will be 3 times higher. We know that. We know that Anthropic is compute limited, factory limited. It's no different than Mercedes being factory limited or any company being factory limited. And so if they had more compute in their factories, they will have higher revenues. If OpenAI right now had more compute, they will have higher revenues. And so the first thought is that compute equals revenues. Now, the big idea, of course, compute equals GDP. That we also know. Compute equals a country's GDP. And so that's one thought. The second thought, the reason why NVIDIA is so successful is because we engineer these systems full stack, end to end, and they're architected from the ground up to generate tokens at incredible effectiveness. NVIDIA's tokens per watt is an order of magnitude ahead of the competition alternative. Tokens per watt. Now, what does that mean? Remember, your factory has 1 gigawatt. And if your tokens per watt is 10 times the alternative, your revenues are 10 times the alternative. For the very first time in history, the computer architecture chosen in a factory, in a company's factory, must go through CEO review. No question about it. That company only has a gigawatt or 2.3 gigawatts for next year. If they put the wrong system inside, it will affect their revenues the next year. I promise you that. And we see it. And so our architecture being so advanced now and pulling further and further ahead, there was probably one of the most exhaustive benchmarking done is by a firm called Semi-Analysis, and they declared NVIDIA inference king. Inference king. Inference is tokens per second, tokens per watt. It's about generating tokens and tokens per dollar. When our performance per watt or per anything is so much ahead of the competition or the alternative, our tokens per dollar is also the best, which means we're the cheapest tokens you can produce today. Not even close, an order of magnitude better. And so that's the second thought. The second big idea for AI is AI is a factory, because factories are power limited always. Doesn't matter how many plants you have. Each plant is still 100 megawatts or gigawatt. And therefore, tokens per watt is the single most important thing for the top line of companies. And they have to make those decisions very, very carefully. You know, it's no longer just about PowerPoint slides. You're not going to go put $50 billion down on somebody's PowerPoint slides.
So the token demand is extraordinary, as you just mentioned. We're seeing it in your numbers, right? I think I mentioned 46 billion in net income, but $70 billion in revenue.
You were going to ask me something about how to fund it. Can I just tell you how to fund it? First of all, I just told you, the reason why you have to build these factories in the future is because you just believe that, one, software is important. And so I hope this audience believes software is important. Software runs the world. First thought. The second idea is this. There will be no software in the future that's not agentic. Do you guys agree with that? How could you have software that's dumb? And so it is absolutely true that every software company will become an agentic company. They're going to simultaneously use open models, okay? Open models mean the ones that they download themselves and they fine-tune themselves. They're also going to use closed models. The combination of all that, just like all of our companies, we have employees that we hire. We have employees that we're grooming. We have contractors that we bring in. We have specialists like yourself that we bring into the company to do our work. Our job is not to do the job. Our job is to have the job be done. That's what every company does. And so therefore, every company will realize that these AI models, some of it you rent, some of it you build. That's not illogical. Just like biological workers, you will do that with digital workers. And so every single software company in the future will no longer just rent tools, but they'll rent also experts to use the tools. They'll not just rent tools, but rent experts that use those tools, because their agents are going to be extremely good at using their specialized tools. And so every single software company, what is the IT industry is a couple $1 trillion. Today, they're tool renters. In the future, they will, of course, they'll rent agents that use those tools, which means that the software industry in the future will be much larger than the software industry of today. You pick your favorite software companies, and I can imagine a much, much larger future for them. Cadence is going to be much larger. Synopsys is going to be much larger. Siemens is going to be much larger in the future. But their business profile will change because today they're basically a software licensing company. In the future, they will also rent tokens, specialized tokens, which also means that $2 trillion industry today with no token consumption in the future will be extraordinary token consumers. That's where that money is going to come from. All of those the IT industry of today, not the enterprise companies, the IT industry alone is going to shift is going to consume enormous amounts of tokens in the clouds, and they're either open models or
so that extraordinary token economy is facing some constraints. So we've got memory constraints, we've got power permitting constraints. I was in Texas with builders. We have electrician constraints. How do you see that playing out? Satya raised it in the last session. You're closer to it. And also, if it takes a little longer, is it still okay, or is it really negative if we just, if the cycle on building this extraordinary?
I love constraints. I love constraints, and the reason for that is because in a world of constraint, you have no choice but to choose the best. You can't squander your choice. If the data centers, if the land power and shell is constrained, you're not going to randomly put something in there just to try it out. You're going to put something that you know for certain is going to deliver the tokens per watt, that you know for certain is going to allow you, from the moment you secure the capacity, we're going to be able to stand up an entire factory for you. We're the only company in the world that can come into your company and help you stand up an entire AI factory. So anybody here that needs an AI factory, and you need, I'm happy to help. You call one person, and that one person comes in, and next thing you know, you're in the AI factory business. Okay, and so we have the expertise. We know the architecture works. We know there's enormous demand for the architecture. After you're done standing it up, so we can help you get into business. And so when you're constrained that way, you have no choice but to make the best choice. Because your revenues next year is directly correlated to it. And this is one of those questions now for all the CEOs that are in the cloud, they're cloud service providers or software providers. If they make poor choices, this is no different than me choosing the wrong foundry. This is no different than me choosing, you know, the wrong memory, the wrong anything. Because I have so little, everything is so constrained. If I choose poorly, my revenues are affected, everything's affected. And so they can't choose poorly. The second thing is, you know, Nvidia is, as you mentioned, working at such a large scale. Our supply chain, one of the things that we do with our money, of course, is to secure our supply chain. One of the things that we do with our capital is to secure our supply chain so that when Satya asked me to help him stand up a few gigawatts, the answer is no problem. And the reason for that is I got all the memories, I got all the wafers, I got all the CoWoS, I've got all the packaging, I've got all the systems, I've got all of the connectors, I got all the cables, you know, everything from copper to multi-layer ceramic capacitors, everything secured. That's one of the reasons why NVIDIA's balance sheet being strong is so strategic. A strong balance sheet today is not only helpful, it's strategic. And so you look at the amount of revenues we're shipping into, just look backwards and look at the capacity, the amount of supply chain capacity we had to go secure or that they have to believe. You know, if you set up a factory, a plant, a DRAM plant, and I come in and say, you know what, go ahead and set up the DRAM plant because I'm going to use it. That goes a long ways. You might as well take that to the bank, as many of them have. And so I think the fact that everything is scarce is fantastic for us.
And I think it does create duration, which I think is extraordinarily powerful for you. I think just another layer, which is the ecosystem. You are the greatest cash flow generating company in history. And then you've taken that capital and really created, it feels like, stability, diversity in the ecosystem. And so how do you think about that in both a financial and a strategic context as you build, I think, both duration and durability in the entire ecosystem?
Yeah, you know, when Mark took me public, I think it was probably, you know, a little bit less energetic than I was delivering it just now. But I am fairly certain I said all the same things. NVIDIA has been building, remember, accelerated computing requires that I build an ecosystem. You can't just take code and decompile it and it works. There's no such thing as a universal accelerated computing system. Accelerated computing is by definition proprietary. There is nothing about our architecture that is compatible with somebody else's. It's just not. The instruction set is different, the architecture is different, the microarchitecture is different, everything is different. And so we hide it underneath these, these things in such a way that makes you feel like, and because of NVIDIA, we accelerate everything from data processing, molecular dynamics, fluid dynamics, particle systems, you know, biology, chemicals, you know, all the way to deep learning, right? Robotics, you know, long sequence, spatial, 3D, you name it, right?
Sounds like a five-layer cake.
It's a five-layer cake, right? Exactly. But because we've been working on it so long, it looks like everything's accelerated. But it's not true. It's because I did it one at a time, one domain at a time, that all of the important domains in the world are now fully accelerated. And so the thing that we do on the supply chain side, our balance sheet is incredibly valuable because it provides security for our customers. On the upstream side, I'm cultivating new ecosystems for the future. All these AI natives that I'm investing in, the companies that I'm partnering with, these are expanding, extending the CUDA ecosystem. 100% of everything that we do is on top of CUDA. Every investment that we've made is on top of CUDA. So recently there was a question about are we going to invest $100 billion in OpenAI? We just for everybody's update, we finalized our agreement. We're going to invest $30 billion in OpenAI. I think the opportunity to invest $100 billion in OpenAI is probably not in the cards. And the reason for that is because they're going to go public. And so I'm fairly sure that if we provide the capacity they need, which the compute capacity they need, which we're ramping up hard to go do, the revenues will more than follow, and they're going to go public towards the end of the year. And so this might be the last time we'll have the opportunity to invest in a consequential company like this. And our $10 billion investment in Anthropic probably will be the last as well. And speaking of that, the one of the things that I wanted to make sure I told you guys this time, and something new that you probably haven't internalized, you see all the news, you probably haven't internalized some of the really great work that we did last year, the last year and a half or so, last year or so. We expanded OpenAI's capacity from Azure to OCI to now AWS. We expanded OpenAI's reach of capacity to AWS. We're ramping AWS like mad. We're ramping them as hard as we can so that OpenAI has accessed even more capacity. That's one. The second thing that we did, and this was a really, really great outcome, is we're now also working with Anthropic. And in the case of Anthropic, we're expanding their capacity as aggressively as we can at AWS as well as Azure. And so notice what we're doing in both, they used to be one-on-one, now they're kind of cross-product. But the amount of capacity that we're going to bring online for them, supporting their revenues, their quality of revenues are so good, we just need a lot more capacity for them. So I think that this is something that that is somewhat new. And of course, the third thing that happened is a brand new AI lab flashed into the world. Isn't that right? I don't know, nobody's mentioned them. A brand new lab came into the world, and they're going to need a few million GPUs, and that's MSL. And so that MSL is a net new on top of Meta. So we've worked with Meta a long time. MSL is a net new on top of Meta. And so these three things happened. Three new growth vectors. OpenAI at AWS. Anthropic, totally, at both AWS and Azure. And MSL. And so our demand profile went from being incredibly high to higher than that.
Speaking of more than that, there's Waymos everywhere. I want to walk my new dog with my new robot. Physical AI could be the next place. How does that take TAM and tokens to a whole nother level?
Yeah, that's really great.
NVIDIA.
That's really great. AI is all the stuff that we're doing inside the building, but obviously, ultimately, the largest industries are outside the building. And that AI needs to have physical awareness, physical understanding. Causality, you push a bottle, it falls over, it understands gravity, it understands collision, understands inertia, understand those things, okay? And understands, for example, object permanence. I take this and I put it behind my chair. In your mind, you can't see it, but you realize it hasn't disappeared, okay? So object permanence. Things like that affects physical behavior and physical intelligence, fairly importantly. And so you probably also don't know this, that NVIDIA is the frontier of physical AI. Cosmos is the most downloaded physical AI model in the world. NVIDIA is also the frontier of autonomous AI. Two versions, autonomous vehicle called Alpamayo, look it up, #1 downloaded. And then the next one, Groot, humanoid robotics, physical AI. We are at the frontier on all three of those. We're also at the frontier of digital biology AI. Look up La Proteina, incredibly successful. La Proteina for digital biology, there's a whole bunch of other models. Groot, N2 is now #1 most downloaded humanoid robotics model in the world. And so we are at the frontier on physical AI. Physics. laws of physics, multi-physics, Earth 2. We're at the frontier of physical AI. That is physical AI and AI physics. And so these whole area of physical AI, NVIDIA defines the frontier. It is completely open. We open it because we want to enable every company, new or old industry, to be able to take advantage of this capability. And we've got the whole stack and the necessary computers for you to advance the AI for your own use, as well as deploy it inside a robot, inside a plant, at the edge, at a radio tower, deploy it everywhere. This is the next frontier. In 2 years' time, we're going to be largely done talking about agentic AI because we're all going to be using it. In 2 years' time, and if you invite me back again,
every year,
we're going to be talking about all these new companies. Of course, we announced a very important one, a co-innovation lab with Lilly. There'll be others, but you know, this, in order to set up Lilly's AI factory, unless you have the capabilities of NVIDIA and this full software stack and the capabilities of all the model and the expertise in that digital biology domain, how would you even do it? And so the things that we are building in the next couple of years, you'll see really come to fore. And we're going to be talking about physical AI for, you know, starting next couple of 2-3 years and for a decade.
So the speed of innovation and the pace that you're operating in is truly extraordinary. So at the beginning of the week, my partner Joe Moore made NVIDIA his #1 pick.
Is that right?
It's his #1 pick.
Thank you.
Thank you.
Thank you.
Good timing, Joe.
33 years later.
How do you think about the stock? Do you think about the stock? Do you have perspectives on it? You're so extraordinarily important and busy around driving all this innovation for, in essence, everything that's going on with 3,500 attendees, and we had $40 trillion of market cap here. How do you think about that?
Well, you know, of course, I care about the stock. I care about shareholders. I care about our employees. I care about all of you. And you might be referring to, we just had the best earnings in the history of earnings. Is that what you were saying? I think somebody actually told me that this might be the single best print in the history of humanity. And I said it must be only you know, recorded humanity. I'm sure somebody had better returns. But anyways, we had a very good quarter. Listen, you can't hold the stock back. You can't hold it back. And the reason for that is very simple. Compute equals revenues for companies. In the future, every single company will need compute for revenues. I'll just make that prediction for now. Every single company will need compute for revenues. And the reason for that is because compute translates to intelligence, which translates to your digital workforce, which translates to your revenues. I'm certain compute equals revenues. I'm certain also that compute equals GDP. Therefore, every country will have it, because not one country in the future will say, guess what? You know, we're going to opt out on intelligence. We've got, I don't know what we got, but we don't need intelligence. That's the one thing we don't need. Okay? And so if you need intelligence, you're going to need digital, you're going to need AI, you're going to need compute. And so compute equals GDP. I know that for certain. I also know that we're at the beginning of this journey. And I see crystal clearly exactly how it's going to get funded. We know for a fact that all the CSPs took all of their CapEx and they converted to generative agentic systems, AI systems, because it helps search, because it helps shopping, because it helps ads, because it helps social, because it helps literally every single internet service in the world has been reinvented into generative AI. So they could take 100%, the entire internet industry could take 100% of their CapEx and make it AI because it's better. We've proven it to be better. Meta has proven to be better. Google has proven to be better. AWS has proven to be better. And so you could now take your CapEx and convert to this. Number two, I just said, the entire software industry will be token driven. The entire software industry. You pick your favorite software company, and I can show you exactly how they're going to be token driven. And that token, you take your favorite, software company, their token will be either produced by themselves, which needs compute, or they could be resold from Anthropic or OpenAI, and that needs compute. And so what that says for the first time is the entire IT industry will have to be fueled by compute. That's exactly where all this is going to come from. Trillions of dollars of it. And we're at the beginning of that. So that's my prediction.
Thank you, Jensen, for making history at this conference. 27 years. Thank you.
Oh my gosh. Ladies and gentlemen, I mean, that was Jensen at his finest. A couple of burns in there, an unbelievable understanding of his company, their market position, how they're going to win, why they're going to win. Some strong statements. Stock is pumping. That's what this goes to show you that even $5 trillion companies are still motivated by story. You needed the smartest guy in the room to come tell you what you should have already known. Company revenues are directly correlated to compute, and compute will eventually equal GDP. And now some people thought, okay, well, every single company is going to buy GPUs. I saw some companies like this. Tanner, you go out and buy GPUs. I am. Here's the thing: is the way that the system is created is that it's not actually that everyone is going to Nvidia and buying, NVL72s. There's a few companies that are buying these GPUs, and then we tap into them for their services. So if you're using OpenAI, if you're using Anthropic, if you're using, really any other AI service or cloud service at all, you are buying GPUs. That's how you're funding this growth, right? So I would worry about it less. Like, obviously the large customers and the large cloud companies need to worry about buying the GPUs, but your token usage over time is would be directly correlated to how essentially Nvidia would be seeing that growth. Okay. So no, I'm not putting a Rubin factory in my house. The Rubin factories are being set up probably in some desert somewhere, and then I come in and I just ask for more base 44 tokens and Perplexity compute and all of these things. Speaking of, base 44, Wix up 12.5%, $83 a share. I knew it was going to be good earnings. I didn't do anything about it, but they ended up closing off their quarter at $56 million of ARR on base 44, which is higher than expected. And already as of today, since they reported their thing, they said they're already above $100 million of ARR between now and the time that they actually reported their earnings. Crazy. Very, very exciting. Getting my money right said, a true one-of-one company and CEO. I'm even more bullish now than ever after listening. I mean, it was a lot of what he's said in the past, but I did very much like the way he said it, for sure. You have to love. Sometimes you need to be reminded, Don't call it a comeback. The conversation, token per watt is the single most important KPI for them. Some of the commentary that he said about having specialized agents and specialized tokens, and that companies are not hiring for the process of doing the job. They don't want the doing part. That's not the important part. It's getting the job done. So whether you're getting that done from a human or an agent, that's what you're going to hire for. And if that requires a new marketplace of jobs being specialized agents and specialized tokens, this industry is going to be, and I don't even think it's 10 times bigger, 100 times bigger, 1,000 times bigger. I think we need to start looking at the 100,000x, 1 millionx larger than where we are today in terms of token use. Because You're talking about running entire economies. This is like old conversations that Elon Musk used to have all the time of like, you know, essentially like what is GDP if there is no, or sorry, what is GDP per capita if there is no capita? Like what's the limit if we're not worried about the amount of people that are in the workforce and we're actually judging it based on, you know, total compute that's in the workforce? Much easier to make an NVL 72 than it is to make a baby, surprisingly. It's not that it's less complicated. Maybe, well, I mean, it is definitely more complicated to make a baby, but you know, a lot of components in an NVL 72, but the, you know, it doesn't take 18 years to get it up. That's the important part. The interesting part about Base 44 is that they're getting the benefit of AI without the cost. I don't know if that's true. I think they're spending an absolute fortune on the cost. They're very much in the negative. Like CapEx is one way of looking at it, but then you have like everyone's worried about the CapEx, but then those chips will be around for 6, 7, maybe 8 years. So we're just sort of like front loading that cost. After that, the margin starts to explode. I think the companies that are more focused on like, okay, well, let's not set up, but then we'll go and we'll tap AWS and Nebius and all of these companies. Like you're going to have to pay their premium. The tokens they're selling you are profitable. But obviously, you know, it allows them to be a little bit more capital light. Tokens is the dumbest concept I've ever heard. It's just you know, what they essentially call the unit of measurement, right? So call it whatever you want, but it's just a way of sort of trying to put everyone on an equal playing field. So then, you know, essentially usage-based costs. How does a water meter end up measuring how much a household or a business is using, how much water? How does your electricity bill end up getting billed? Well, same thing. How does your GPU end up charging you for the amount that it's ran for your services? So essentially, that's all it's trying to state. By the way, look at this pump on Nvidia right now. Hoo-wee! Yeah, or calorie. Yeah, there's a ton of different ways that you can think of it. Okay. My understanding is Base 44, the reason why the margins are coming down was that they had negative margins right now because they're growing so fast. I'm sure on an adjusted basis, dude, look at this pump on Nvidia. On an adjusted basis, in terms of like how much they're selling each customer's tokens for on a per dollar basis, that's perfect. Jonathan said new stadium. Is this a thing? Is this a thing? I don't even know what you're talking about, but I can already imagine that what you're saying is true. And I'm going to their website right now, and I really want to see this. New bank. Tell me they bought a naming rights to a stadium. They did. Thank you, Jonathan. You're an absolute gem in chat. Thank you, brother. New in Inter Miami CF announced a multi-year partnership and unveiled new stadium. Isn't that Messi's team? Yeah, it is. Wow, they're all going to be Nubank individuals now. Purple shirts. Wow, 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 wow. Look at this. Sort of the little drawn up concept here. New stadium. The new era starts now. They got Messi right there. If you're going to do it big, Nubank. I freaking love this company. Dude, investing is the greatest game of all time. I don't have to, at least the way that I do it. All these stressed out day traders and everything like this. I know they say don't fall in love with the company, and I absolutely will dump Nubank and SoFi and Nvidia if they ever mess up, but I haven't seen it yet. And these companies just continuously get better and better over time, and I love to see them grow. So, maybe Nubank starts entering the United States market. Maybe they start getting naming rights on different stadiums. The world's their oyster. They get to do what they want. And I get to enjoy the benefits of Nvidia here up 2.5%. That's a great day, ladies and gentlemen. That is a great day. What are your top 5 holdings? Nvidia, Shopify, SoFi, Nubank, and Hood in that order. So a lot of fintech, but the weighting of that is that my Nvidia holding is bigger than all those other 4 put together. So, yeah. Let's see Nubank's price action here on that news. Up 2.5%. Gotta love it. 15.12. Okay. Gemini up 34%. Nice big pump here. Coinbase up 15%. Dude, what? Gemini's spiking up like Bitcoin's shooting up or something. Bitcoin, ETH, Cypher Digital. Let's have a look at Robinhood up 7%. We're going to have to set up the stream later. They're going to have another event, the Take Flight event. That's going to be at 7:30 today. Okay, so from 7:30 p.m. Eastern Standard Time to 8:30, they're going to be showing off new products that they said are going to be based around family finance. That's as much as we know right now. Okay. Is Revolut in the same field than Nubank and SoFi? In similar fields, yeah, for sure. Different approaches to how they do things, but financial super app trying to grow across geographies, explosive multiple. Yeah. Slightly different approaches in the way that you enter those spaces, but yeah. My wife asked if it's too late to buy some Nvidia. I personally don't think so. Depends on if you have a position in it. I mean, I personally like it. I've got a long-term hold base. You just heard the Fireside chat. If you're a believer in what Jensen has to say, if you believe that more of the world's tools and things that will essentially will be built will be off of artificial intelligence, that artificial intelligence will be run on GPUs and other chips. We will essentially have a workforce that is a mix, not just of human labor, but of human and silicon labor, or human and AI labor. And my belief is that won't be a 50-50 split. I think that'll be more like a 99-1% split, 1% being humans. And I don't think that has to come in the form of unemployment either. Just, we're going to essentially, every employee is going to be managing 50 to 100 different agents that are all doing repetitive manual tasks that are much easier for them to do and way too time consuming and not important for us to try to solve or figure out. And yeah, if you believe that, it's hard to not believe that the need for chips in data centers is not going to increase over time. DP said there will be a $50 trillion company someday. It sounds crazy right now, but I'm completely on your side. I think there's going to be a $50 trillion company in my lifetime. I don't know when. But yeah, whether that's driven by growth or inflation or what have you, or it's going to be nebulous. It definitely could be Google or Amazon. I mean, if those companies continue to grow, that's absolutely possible. Honestly, I don't think if you look before 2018, so everyone thinks I'm crazy here. That's a 10x from the biggest company today to $50 trillion, 10x. If you go back to before 2018, it's not even 10 years ago, the biggest company in the world didn't even pass $1 trillion market cap. The first company ever to pass $1 trillion was Apple in 2018, late 2018. So in 2017 or anything before 2018, we had never seen $1 trillion companies before. Now we're seeing $5 trillion companies. That's a 5x in less than 10 years. You're telling me in my lifetime, over the next 50, 60 years, we're not going to 10x the biggest companies in the world with robots, artificial intelligence, self-driving cars? I don't know. I'm not that pessimistic. Growth is exponential. Dylan, I agree, brother. I agree. It's hard not to see all the new things that are happening in the world and then be pessimistic or doom or a little bit of doomerism. And actually, this brings me to a video that I watched earlier that I would love to show you guys. This is phenomenal. Let's bring this up. Goldman Sachs ended up going on CNBC to talk about their 2026 outlook, essentially just for U.S. economies in general. And why'd that switch? Let's check out Nebius before we jump over. But essentially, one of the things that they wrote about was United States reliance. Or sorry, not reliance, United States resilience, and how their resilience is remaining resilient. I'll let her talk a little bit more on this, but I actually thought a lot of the things that they said over the course of this interview were extremely sort of base, no extremism talk, nothing like this, like very, very the way that I think about things. Maybe that's wrong, but I liked it a lot, and I'd love for you guys to have a listen.
As the Iran conflict enters its fifth day of hostilities, we're joined now by Sharman Mosavar Rahmani, Chief Investment Officer for Goldman Sachs Wealth Management. She's also CIO of the firm's investment strategy group. And her market outlook is titled U.S. Resilience Resilient. Yeah?
Yes.
Reading, okay. So
What's the point?
No, I read everything with a little bit of, I'm never sure about what I'm is likely to appear on this, but that is what you meant to say.
Yes,
Explain.
The point is that investors continuously underestimate the resilience of the U.S. economy, the innovation, the creativity, the adaptability. And we show that this has occurred time and time again when people say, oh, this is the decline of the U.S. We've had that since the 50s. Russia was great. Russia had Sputnik, decline of the U.S. Every 10, 15 years, we call them the declinists, come out in full force. Right. And we've had that again for a whole host of reasons. We had that after COVID because of the fatality rates in the U.S. were so much higher than other parts of the world. And so that's the theme. People should recognize that U.S. preeminence is still intact, right, and stay invested in U.S. equities.
You remember before China, there was Japan.
Exactly. The Asian tigers, Japan.
They bought Pebble Beach right at the top. Exactly. But yeah, that didn't happen. Every time you go back and look at the first Gulf War, the second Gulf War, the first, whenever there's something like this that looks, and it is very serious, and there's loss of life, and it's unsettling to everyone, but the market always seems to react for less than a week, almost, before it just gets back to whatever it was reacting to before the conflict. Is that going to happen again?
You're exactly right. If we actually go back 40 years and look at all the strikes from the U.S. in the region, so Middle East, North Africa, we include Libya, Operation Desert Storm, all of these, whether they're very short, like what we saw in the summer of last year, or something like Operation Desert Storm, much longer, after 8 weeks from the initial strike, U.S. equities are actually up about a little over 4%, and they're positive 95% of the time. So basically, once these things are over, oil flows through, it is not going to have such a material impact on the US economy. So correct from a humanitarian perspective, loss of life, all very serious issues. But from a market perspective, on average, equities are up. And in fact, oil prices on average are down 70% of the time after the initial increase.
So take away what we're talking about with Iran and just talk about employment, the picture there, the inflation picture, the growth picture for 2026, all positive?
This war has not made us change our base case view. So our view of US growth at about 2.4%, inflation under 3%, and steadily but slowly declining. Our view is that this increase in oil prices is not going to be sustained at these levels, and so it comes back down. So no material impact on growth or on inflation, and basically pretty robust earnings. So yes, we think basically a generally good environment. A very low probability of recession. Our base case is 25% probability of recession. So with that backdrop, the idea is with good earnings growth, stay invested. I know you don't always like our probabilities, but our base case is 55% probability of about 7% for the S&P, but 25% actually double-digit returns, mid-teens.
What about a down year probability?
We have about a 15% probability to the downside.
50?
1.5.
I'm sorry, I asked you. You're right. I don't like. 15.
55. So 55 and 25, so roughly 80%, and then about, let's say, 15, 20% on the downside. Given we do say there's some probability of a recession, right? In this environment,
that's what it would take, though?
happen.
That's
Yes.
what it would take to bring oil.
Yes.
Wow. So
See-
that's that. If you're hoping for lower oil prices, beware, because the reason that it would get there is not necessarily one anybody wants to
No,
see.
our base case for oil prices, again, leaving aside this war, is $50 to $70 a barrel.
Earnings for this quarter, year?
Well, the
Overall?
earnings, so if you think about earnings last year, we had pretty robust earnings, right? 13% growth. Last quarter's earnings was the 6th consecutive quarter of double-digit earnings growth.
Right.
So our base case is that we think about a 10% earnings growth for 2026. That's well above average.
Mhm.
So again, a very good backdrop for the markets.
Why do you think there's so much, I don't know, exhaustion over the AI trade, concern over the AI trade at this point? What do you attribute that to?
In our report, we have a section, actually, we call it bubble trouble here and there. And we're saying US equities, actually, if we factor in dividends and the payout ratios, meaning from buybacks, it's very attractive. And if you factor that in, US equities are about fair value. However, when we look at AI, especially in the private space, we think some of the expectations are a little bit unreasonable about how quickly AI will be absorbed and how quickly some type of labor will be replaced. There's no doubt that these AI agents can be incredibly helpful, but this assumption that labor is going to be totally replaced, or this scenario from that research piece that affected the software index, it was a scenario, and they actually talk about it as a left tail risk. So is that a 2% probability? Is that negligible? So I think the base case is AI will have significant impact. It will take time to actually affect the labor force. And it's probably not going to be as draconian as some people like to say. And there's probably a little bit too much hype and positive expectations on how quickly it will affect the bottom line, right? There was an incredible, interesting MIT study that all these companies are using it, but they actually haven't seen the bottom line effect yet. And so I just think it takes more time, and maybe there was a little bit too much positive expectation.
Do you think that it hits the bottom line for these companies that are using AI first, or do you think they get disappointed and they pull back on spending on AI?
We don't think that hyperscalers are going to pull back on the CapEx. So they will continue. There is a little bit of misunderstanding on the impact of that CapEx on the US economy. Some people have come out and said, if it wasn't for all this CapEx, US growth would be negligible. That is actually not accurate.
Really?
our colleague Jan Hatzius, whom we all know very well, has done, and his team have done work that show last year, all that CapEx only contributed 0.1% to GDP, all that CapEx, and out of a 2.4% growth. From our perspective, all the technology spent was 0.5% of the 2.2% growth. So that probably won't come back. And I think companies cannot afford not to compete. They cannot afford not to absorb.
Sharman, you're born in the UK. Your family has an interest in Persian Gulf studies, gifts at universities for Iran studies. Can you give us anything personal on what has transpired in the past?
I care less about this. But overall, someone, Mosh said, do you trust this lady or Jensen? I don't even think their opinions are too dissimilar. I think that she's actually very bullish, but just, wants to maintain a level of conservatism. I don't think that in terms of like whenever she comes out and says, hey, you know what, the job loss and this sort of stuff is not going to be as draconian as what people are stating. I actually love that. I think, how do I say this? I want AI to be real. I don't want it to be real in the face of like human jobs, because then there's no one to buy the services and GDP to, increase if 99% of jobs don't need to exist, or whatever the percentage of jobs over the next 30 years after robots and everything like this, like the great human replacement that some people like to portray in terms of, the agents will do the white collar jobs and the robots will do the blue collar jobs, and then boom, humans can retire forever. Oh, hold on a sec. We just got a video from Robinhood. But by the way, I was just going to say, I don't believe that. All right, let's quickly see this. I'm not playing the music because I just saw that there was copywritten music. Clock ticking up, 7:30. Okay, wait. Let's read everything here. Robinhood Air. RHA 198 New York boarding. Okay. Take flight. 7:30 tonight. Robinhood. So this is the time that it's at today. Yeah, I don't think there was literally anything else to go off of. And I think the Robinhood Air thing is maybe just them not using a specific airline. We'll see. Yeah, maybe travel rewards. I'm not sure. Going more international, it can that actually can't be the case, because this is not an investor presentation. This is a user presentation. So them saying they're entering the Philippines and inviting a bunch of US consumers to come watch that video would be absolutely pointless. I'd be like, okay, who cares? What's for me? RHA is Robinhood Air. I mean, that could be the name of a product that they end up announcing. Yeah. But it's supposed to be a family product. And yeah, you're right. There is a family running through. This is a family. It's the whole family. Wait, how young? How young? I mean, that's a kid. Maybe not. Okay. I don't get to see the fourth. There is a fourth person, but I just can't see who it is. Nothing else. Yeah, okay. Joint account. Don't they already have joint accounts? I just got Robinhood custodial account access yesterday. It's going to be interesting. I'm paying attention. This is Robinhood at their finest. You know, when does Robinhood shine the most? When they're putting out products. Hopefully they do this 3 to 4 times per year, constantly expanding their TAM. We love it. You know? Okay. That said, did we talk about the JP Morgan thing? Did we do that at the beginning of the stream? No. Okay, we have to watch this JP Morgan thing. I watched this in the private live stream. That's why. This is freaking hilarious.
You and your peers have reportedly clashed with Coinbase's Brian Armstrong over the Clarity Act and specifically this idea of crypto exchanges offering rewards for stablecoins. And Armstrong was on CNBC with Sarah Eisen a few weeks ago from Mar-a-Lago, and he said there's a path forward for the market structure bill that's a, quote, win-win outcome for everyone. How are you feeling about it right now?
Yeah, so the banks feel strongly that there should be, rewards are the same as interest. And that, a compromise would be that you could pay rewards on transactions, not balances. If you are going to be holding balances and paying interest, that's the bank. You should be regulated by a bank. So we've been firm. One thing over here, yes, but if you want to be a bank, become a bank. Then you can do whatever you want under bank law. So I remind people, and your viewers may not know, banks have restrictions and requirements. FDIC insurance, AML, BSA, we have Community Responsibility Act, which means we have to open 25% of our resident LMI neighborhoods. We have social requirements. We have liquidity requirements, capital requirements, transparency requirements, reporting requirements, board requirements, government's requirements. If they want to be a bank, so be it. So what we base says level playing field by product. It can't be you have these people doing one thing, without any regulation like that, and these people do another. And if you do that, the public will pay. It will get bad. So people should take a deep breath at what is you want, and we want competition. We're actually one of the biggest users of blockchain. And
it's such crap. It's so hard to, I've listened to this video like 3 or 4 times. It's such crap, dude. You do not want competition. The consumers will not pay. The consumers are not getting paid right now under you. And he said, okay, well, if you become a bank, then you can do whatever you want. And then he quickly squeezes in under bank law. But you're trying to change bank law. Here's a fully fledged financial institution, the same exact bank charter that JP Morgan has, SoFi. Anthony Noto says the Genius Act is a great step to modernize our financial system, but it doesn't go far enough. Its prohibition of paying interest on payment stablecoins is a loss for consumers and a clear concession to incumbent banks. Like literally, JP Morgan, we're talking to you. While this legislation is important in driving mainstream adoption of digital assets, it prevents customers from sharing in the returns that companies generate on stablecoins in order to protect the big banks. He goes on and on and on, but essentially just saying, we've never halted innovation in the country for fear of disrupting old models. We shouldn't start now. Protecting incumbent low-cost deposit bases come at the cost of consumer economic benefits, choice, innovation, and U.S. competitiveness in financial infrastructure and markets. SoFi literally said, here, he's like, we would benefit from keeping all the money to ourselves. We don't want to. We want to play the even, like let's play on even ground. They're not trying to be an incumbent bank. They're trying to innovate. And they did that by becoming a bank and trying to offer their consumers a better product. This has actually gone so far that, in fact, Trump even has said, look at this. Trump said, the Genius Act is being threatened and undermined by the banks, and this is unacceptable. We are not going to allow it. The U.S. needs to get market structure done ASAP. Americans should earn more money on their money. The banks are hitting record profits, and we are not going to allow them to undermine our powerful crypto agenda that will end up going to China and other countries if we do not get the Clarity Act taken care of. The Genius Act is already finished. JP Morgan's trying to go in. We have AML. We have all these social acts. We have blah, 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 blah. Dude, there's a lot of crypto companies and SoFi and all of these other ones that are fully fledged banks. You're not talking about them. You're not saying, oh, you can offer a rate once you're a fully fledged bank. You know? It's crazy. Okay. So I do like Jamie Dimon, but boy, oh boy, like we've listened to a lot of things where people suggest they're talking their own book. I've never seen it so strong in my life from Jamie Dimon right here. He knows he is spitting lies through his teeth. Okay. Apple is announcing that they are going to be selling a new MacBook Pro. Well, not MacBook Pro, I shouldn't say, but a new MacBook called MacBook Neo. Starting at $599, it's the lowest price Mac laptop yet. And in fact, the first thing that I thought was, wow, this is going to, fill schools like crazy. Every single, student should end up buying this. Only $599. I ended up realizing, and I don't know if they say it in the comments here at all, but there's actually a $100 discount for students. So it's actually $499 for students, which I thought, wow. iPhone 16 Pro chip, 12.9-inch display, perfect enough to bring to school. Everyone trying to get me to do the Broadcom stream. Here's the problem, ladies and gentlemen. My throat hurts. I'm sick. I shouldn't be talking this much. And I've already done, this is my third stream of the day. You guys want me to do one, I have to do the Robinhood one. And then it would be my fifth stream of the day. Fifth. Bitcoin and ETH are running. Let's freaking go. ETH about to break 2,200. Let's watch it live. Let me take a sip of water. Okay. Why SoFi dead? Enough with these comments, man. Give it a day. Give it some time. Stop complaining and get to streaming. All right. Yeah, my bad. My bad. Amit never complains. Bro, the dude's not going live. He didn't give you guys a reason. He could fully stream it. He's not busy until 6. He's got his call to go to at Robinhood between 7:30 and 8:30. He's dipping you guys for no reason. Okay? He wants to go hang out with Roy and Chris and all these people. I'm the one trying to give you a reason why I don't want to do it. Okay. Dude, I paid good money to watch you go live. Yeah, did you? I watch good ads. I watch good YouTube ads to watch you go live, brother. Got to drink instant coffee. My version of instant coffee is the drive-through. Will you ever interview Vlad? I have 3 different interviews with Vlad on my YouTube channel. 3 interviews with Vlad and 3 different quarterly things where I was an analyst on the call. Mac Mini or a custom PC? I personally like PC, but like if I ever have a kid, and I don't know what it is, like you ever have this internal feeling you already know what gender it's going to be? Like I want to have kids. I just know it's going to be a daughter. I don't know why. I've got a family full of brothers. Like I only have brothers. My whole family is so male oriented, I think I deserve a daughter. She's not going to want a custom PC. She's going to get a Mac. All right. Good luck with that. Dude, I don't want a daughter. All I've known is like, but I think in terms of like balancing me out and like what's good for life is to bring a little like, I don't know. I already know I'm gonna have a daughter. I already know. You guys don't have a say. I already know. You're not an analyst. Where's your CFA? Go watch a different stream. The opposite here, I have 5 sisters and now 2 daughters. Oh, brother, you got buried. See, I like, it's not that I just have 0 girls in my life, especially now. Like my mom's dead. Like they're like, I have my girlfriend, and that's the only feminine energy around me. So I well, not deserve, but like I feel like I'm almost going to be like, I don't know if it's a spiritual thing, if you're religious, whatever, but I just think that's what's going to happen to me. Because of your low T. Well, I mean, honestly, I've thought about it for sure. Like, I'm not even joking. You're spot on there. It's probably also part of the case. I'm like, yeah, no, it's a spiritual thing. It's just like chemically. It's like, it's just so clearly I'm gonna have a daughter. Yeah. SoFi 1887 up 1.5%. This is what this guy was complaining about in chat. We're green, baby. It's a good day. It is actually like, this is a good day. The Qs are up 1.8%. It's a great day. You iced the boys today? I sauna at night. Did I ice the boys last night? Yes. I started TRT not noticing a difference yet. Well, your name's Soybean Tacos, so that's why the TRT isn't working. They're going up against a strong battle of you eating soybean tacos. Google's red. Isn't Google like flat? Like maybe it's red, but it's like not even down. 0.1. My trading account is up 6% today. That's freaking amazing. Congratulations. Dude, isn't that nuts? Like so many people work so hard and then you can end up making like 6% in a day. It's unbelievable how fun this game is and the potential. My name was made from the Trump trades. Dude, honestly, I hope we meet one day. I'm sure you're an amazing dude. It's just whenever I see a joke, I have to say a joke. I'm glad you didn't get offended. For real, I love all you guys. Like, I can come off a little. It's just I saw a good opportunity. Okay. My whole portfolio is up 12% today because I own a lot of Iran. Wow. Yeah, good day. Nebius too, though. Nebius too, 12.6%, about to break $100 here again. Not that Bitcoin, this Bitcoin. Bitcoin and ETH, are we starting to see some red candles on ETH? It's actually mind-blowing how much they run in tandem. Like not $1 of separation. I'm only watching to see Tanner roast chat. Rob, sometimes it's you, brother. Sometimes you catch strays just out of nowhere. No, I don't have any opinion on lemonade. I apologize. But let's go ahead and end the stream, shall we? I would love that. Supposedly, the really quick, investors are asking the Anthropic and the Pentagon to sort of de-escalate a little bit. And supposedly they are continuing discussions. Sources say Anthropic and the Pentagon might end up being able to, not be a supply chain risk. That would be very nice. They also are talking about hitting ARR this year of $20 billion now. Crazy. See you at the market close. Yeah. Okay, what companies do we have today? What companies? If it's just Broadcom, I'm not going live. I mean, it's kind of just StubHub, Webull, Okta, Broadcom, American Eagle. Viva Systems, Rigetti. Okay. We'll see. We'll see. If you guys are in the Future Investing Discord, I will let you guys know there if I'm going to do it. Thank you all so much for watching. Really do appreciate your time. But until next time, bye for now.